Hey everybody, Chris Bober here with Team Bober at Nebraska Realty, and welcome back to another edition of our video blog. And as you know, at Team Bober, our mission is to educate and empower our clients to make great real estate decisions. And today we're joined by a tax specialist to talk about tax reform and how it affects home ownership. As most of us know, unless you're living under a rock, the president ran on tax reform, and after he got in there, him and Congress, they did get that pushed through, and there are changes to things. There's a lot of changes out there that are going to affect people, business people, individuals, married couples. But what we're here to talk about today a little bit is how it affects home ownership. Now, the National Association of Realtors went and fought for a lot of these rights that were preserved, and they didn't get all of them, but they got a lot of them. So we'll talk a little bit at how it might be affecting people going forward. I'm joined today by Heidi Kelly. Heidi is a tax specialist here at Verdant, and not only is she that, she's a client of ours. We have sold her house, so a great advocate for Team Bober here.
Yep.
And Heidi's going to bring us up to date a little bit on tax reform. So the tax reform went through very recently, and even though it's only now kind of being defined, it applies to all of 2018, right?
Correct. So yes, so Congress, passed the largest tax bill in 30 years, and so your home ownership is actually going to affect your taxes a little bit. I guess, do you want to just start off with mortgage interest?
Absolutely.
Okay.
So with this tax reform, there's some things that they're going to change. Or you're going to have to put some planning into. There are some things that they kept, right? Mortgage interest and being able to deduct that from your income is something they kept, right? At least in part, right?
Yes, in part, yes, absolutely. Existing mortgages, you are still able to deduct interest up to $1 million in qualified mortgage debt. And the change actually comes in 2018. So any mortgages that were written after January 1st of 2018, you are only allowed to deduct the interest on up to $750,000 of mortgage debt.
So you still got, so as you advise people, a lot of times you say, okay, well, one of the things, the benefits is that you can write off your mortgage insurance, or mortgage interest, and there's no limit up to $750,000 in mortgage debt.
Yes.
Right, okay, now let's talk about a couple of things that have changed, right? Because I think these are things people need to plan for.
Okay.
The first thing that in my mind that sticks out is the capping of state taxes. So previous to this, you were allowed to deduct pretty much all of any taxes you paid to the state you live in, right?
Correct.
And that includes property tax. That includes any state income tax paid, wheel tax. So pretty much any tax paid, for example, to the state of Nebraska, I was allowed to deduct it off my income, which reduced my tax liability. Tell me about what they've done to change that.
So the deduction we actually call SALT. It's state and local tax deduction, and they are now capping that at $10,000. So that, as you said, includes your income tax, your personal property tax, which is your car taxes, your boat taxes, that type of thing, and then also your real estate taxes. So they are capping that at $10,000. Kind of the offset of that is they've raised the standard deduction. And so now instead of a $12,000 standard deduction before you itemize, you are no longer itemizing until you reach that $24,000 mark.
And I know that there's
that's for a married couple filing jointly.
Absolutely, yeah. So, but there's a lot of different rules that go in there. So it looks like I can't have too many boats. Can't write up that tax anymore.
Yeah.
But I know personally. For example, I wrote off my state income tax, and that got me to the cap already. And now I'm not even able to write off any of my wheel taxes or my taxes that I paid on my house. So that's raising my tax liability probably a little bit there. So I have to make a little bit of planning for that. And I think as people go and purchase homes, that's something they need to at least understand so that they don't automatically assume that everything's deductible, right?
Absolutely.
Okay. The other thing that's in there that I think came out is they're no longer allowing you to write off your moving expenses.
That is correct. So moving expenses in 2017, you were able to deduct those as an above the line deduction to get to adjusted gross income. Those are no longer available. So that presents an opportunity for you to maybe even, if you are relocating for your job, to contact your employer and talk to them about that. Because before it was a benefit for them to leave that as the expense of the mover, but they're no longer able to deduct those moving expenses.
Yeah, so they are taking some of those things away from you. I'm trying to make it up other places, but and we're not going to get too deep into the weeds of all that. It's pretty complicated, which is why people like you are in business, right? Anyway, I guess the consensus that I see in this thing is that maybe in the past when people were to invest in their home and think that, oh, I have all these advantages of investing in my own home. What I'm kind of telling people is like, okay, understand the tax rules, talk to a tax specialist, and if you still want to own real estate, if you still want to invest and take some tax advantages, I'm trying to tell them and advise them to invest in real estate that they don't live in, right? So my understanding is that when you own real estate for investment purposes, basically you now own a business. So underneath that business, there's several advantages in that. So number one is you're going to be able to take advantage of all the mortgage insurance, the mortgage interest, and all those taxes paid towards that property, right?
Absolutely, yes.
So
yes.
Those things kind of stay in place.
Those stay in place. So if you are investing in real estate, you can still deduct 100% of your real estate taxes, 100% of that mortgage interest if you have an interest, a mortgage on that investment property. Mm-hmm. And so, absolutely. Yeah,
I love helping people invest in real estate. I always say there's four main buckets of advantage when investing in real estate. Number one is someone else pays your mortgage, and you get to deduct that mortgage interest. Number two, you can depreciate the property. Not the land, but pretty much everything else is depreciable in there. And then you can take some tax advantages because any expenses towards that business are now deductible. They come off your gross income. And then at the end of the day, when you go to sell it, the property should have appreciated in value, which it does over time. So another thing they kept out, so invest in real estate, what we're trying to tell you, I'm not giving you tax advice, but there are a lot of tax advantages of investing in real estate. It's a great way to have passive income. Some other things that got kind of left on the table is 1031s really didn't get touched, right?
Correct. 1031 exchanges, like-kind exchanges on real estate. So in the new tax bill, like-kind exchanges went away. The only thing that did not go away is 1031 exchanges, which is like-kind exchanges.
So for property, right? My understanding is they took away the business property, right? Mm-hmm. So now it has to be real property to be exchanged. And the way that works is if you hold a property for investment, and there's qualifications for that, when you go to sell that, you can defer the taxes and the recapture of depreciation by going through a qualified intermediary and following the rules, basically. Mm-hmm. So it's a deferment of the capital gains tax that comes along with selling an investment property. And there's a lot of different rules. I've done a lot of them. I know the people at Verdant have done that too. So of course, see the professionals when it comes to something like that. But it's a great way to invest in real estate. And as you move pieces around, you can defer some of those taxes so that you take advantage of all the benefits of owning investment real estate. So, so tell me about, just to finish up here, 2018 is 4/5 of the way done, right? We're almost done with 2018, and all these laws applied retroactively to this year. So what should people be doing right now before the year ends?
Okay, before the year ends, I think it's a good time to start looking at how you're coming out for 2018, especially if you own a business, if you own real estate. The new tax bill has presented a lot of planning opportunities, and those planning opportunities need to actually be assessed and completed by December 31st. So now is the time to be contacting your tax professional and start asking questions and having them review your taxes and review your situation to see if and what applies with the new tax rules.
So planning is even more pertinent right now because the rules have changed. So you better get on board. Sometimes people want to evaluate how they want to spend their money by the end of the year, whether it's to purchase something, to donate, to invest in something, to take and put it into this fund or that. You want to know how it's going to affect your tax planning for this year. But just like real estate, when it comes to taxes, even more so, you want to call the professionals. Of course, the people at Verdant here, especially Heidi, will take great care of you. And when it comes to purchasing, buying, selling, building or investing in real estate in the Omaha area, call the pros at Team Bober because we work with great people like this. So,
absolutely.
Thank you so much, Heidi. I really appreciate your insight.
Thanks for having
And again, this is not left up. This is for the professionals, okay? So taxes are super important. The one thing you do not want to do is get underneath the IRS. So call the professionals and they'll guide you the right way. Verdant Company, Heidi Kelly here. I'm going to leave her information in the comments below. So be sure to check her out. And of course, with real estate, call Team Bober. So thanks for tuning in. If you have any questions, send them over to us. We'll leave our contact info. And have a great day. And be sure to start planning for those taxes.
All right. Thank you.
That's pretty easy.